Welcome, 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 everybody, to the Master the Market workshop. I'm super excited to be sharing this information with all of you, to be hosting this workshop, and to be having this educational session where you can be learning a new skill or pick up something that you might have known and get a bit more elaboration on it. This is a super exciting time to be here. We're going to help you learn how to make weekly income in the stock market. Okay. My name is Taylor Hamilton. Many people know me as Kiakili in this space, and I'm very excited to be here. So I may be introducing myself or reintroducing myself to any of those who may be familiar with me. Okay. And so throughout this workshop, this is certainly intended for the folks who have had little experience with trading as well as a measured amount of experience with trading. Okay. So one first thing I'm going to do here is just get a first temperature check here. So is there anyone here that's watching that has never traded before, that has never done trading whatsoever? Press 1 if you've never traded. Only one person has never traded. Okay. All right, we're getting some more participation. All right. Press 2 if you've never read a chart or you don't know how to read a chart. All right, now we're getting more twos. Okay. So it seems like quite a people have had some experience with trading somewhat, but lots of people haven't had experience with reading a chart. Thankfully, for you, we're going to absolutely cover that today. Uh, Press 3 if you've ever done covered calls. Do you know what that is? Have you ever done a covered call? I don't know if so. People are saying 3. Have you People may be saying that they bought calls. I'm not sure if you've ever sold where you've done the covered call type of thing where, and so I'm not sure about how many threes. I'm not, you may be, but some people may have actually had a real experience with doing that. Okay. So there's going to be a multitude of things we cover today. Okay. And so, but I'm absolutely excited to just have you all here, as well as to just cover as much as we can in this space. So it's very suitable for anyone who has never traded before, as well as people who have had some experience and are going to pick up something new, especially in terms of practicing your responsibility, being a more responsible trader, and doing more. What more can you do to be profitable in this market here? Okay. So again, just a short introduction from myself. My name again, Taylor Hamilton. I'm from Wyandanch, New York, Long Island. I'm an investor and illustrator and entrepreneur. Okay, I attended the University of Pennsylvania. So far, I have mentored over 1,400 students with trading and charting. Okay, I've led over 20,000 or so towards trading, sharing trading information and being a leader in that space. And we have many people here present who are in the Wealth Squad. If you're in the Wealth Squad, make some noise here in the chat, okay? Press that WS if you're from the squad. And so I've been trading since 2020. This is now my 4th year of trading. Okay. So since 2020, I began with $200 of my own money, right? I began with $200. I was able to grow that now to, at this point, 4 years later, over 1.5 million profits from trading in the stock market. Okay. I'm 27 years old. I began trading when I was 23. And through these efforts, one of the why this is important and why I'm here to share this information, I was able to actually contribute and make change in the things I actually cared about. Okay. And that was through being able to utilize this skill to make impactful change for charities and organizations for which I've contributed over 6 figures to that. Okay. And so a lot of that and that passion, how that carries is what is going to result in what is next for you and exactly what we're going to get into today. Okay. And so the goals of this workshop, in short, of course, to simplify the stock market and trading in an easier way to understand. Okay. After that, we're going to teach how to read stock charts. We've had so many twos up in there. It's not rocket science. We're going to get over that hump. So absolutely excellent for those who have never had that experience before. We're also going to showcase methods on how to earn consistent income in the market and how to develop habits and organizational processes to become more consistent in the market itself. Okay. In turn, providing an organized way of paying yourself and tracking income, and also introducing how to work trading into your everyday life and your 9 to 5. Okay. So there's a lot here to cover. We started here just about on time, and we're just about to get into this. Okay. So with that said, the agenda is going to go like this. We're going to have a bit of background from me, not too long. We're going to talk about some of the benefits of investing versus trading. We're going to dive into trading fundamentals and then absolutely getting into how to read charts. Okay. And that's going to involve a couple of things. Certain ways of earning income in the market. I'm going to cover some more recently that I've practiced, as well as providing a framework how you can go about actually organizing your trading schedule and creating this life that involves trading, whether it is part-time or whether it is full-time. Okay. And then after that, we're going to land and bring everything all together with a blueprint, a full blueprint about what to do. Everyone definitely want to make it known to, stay to the end because after that blueprint, I have some real goodies for you all. And I'm going to provide things that are, it's going to be a full reward for staying to the end. But I want to make sure I'm cognizant of people's time and availability for this today. Okay. So if you're ready to get into this today, press that 3, hit that 3, make it known to me. All right, and taking notes is encouraged, okay? If you have a piece of paper or a notepad, or if you want to jot something on your computer or a smartphone, definitely, I fully encourage that. And if you want to take screenshots as well, I don't mind, okay? So the theme of today is going to be make this your moment. We're going to utilize this theme in a myriad of ways, okay? But remember this, make this your moment, okay? So some background, in short, from my background, right? I started with $200 in March of 2020, okay? And so within 2020, I was simply just working my first job out of college. My background, I've been an artist for most of my life. I've done drawing, graphic design, and I always wanted to be an artist, and that was going to be, the thing that I was fully passionate about. And it's still my passion, right? Uh, but the risk with artistry is that it doesn't always pay the bills, right? And in 2020, bills were just, I was just passing by and skating by, right? Every single day when I would be driving, because the only job I got was a job in Princeton, and I was driving from New York to Princeton every single day. Anyone who's on the East Coast knows how crazy of a drive that that is. And a lot of my time was spent uh, driving, just wondering about what I can improve better. But I had all these ideas about how to improve my well-being, about doing entrepreneurship, about selling t-shirts. I tried a t-shirt business, e-commerce. People, I'm sure some of you may have heard of what's it called in the real estate sector, wholesaling, right? And while I was driving to work on this 2 hours, I was just thinking over and over, like, what's going to get me out of this cycle? Because I can't do this forever, you know? And that went on for some time. when it happened in 2020, when we were forced to go home and quarantine, that was the moment where all of my time came back. And that really gave me that opportunity to just think about how much I valued my time, right? And I invoke that many of you all probably had some of those feelings as well during that quarantine, and maybe still to this day, right? And so further, when it comes to management of time and when that significant change, when we did go into quarantine, knowing that businesses were going to shut down, knowing that everything was going to change, it felt like this was my moment, right? I had just learned just the week prior that you could short the market, something I had never known, right? And on my very first day, with the $200 that I had, that I didn't know what was going to happen to it, whether I was going to win or lose, I didn't care. I trusted with whatever money with the salary that I was going to take a chance here. And boy, did it happen and did it land me to where we are today. Because from that first day, starting from $200, making about $400 my very first day in about an hour, felt like my life flashed before my eyes. That this just felt like this was going to be it. This was going to help the people in my old communities. This was going to help pay off my student loans. This was going to be the thing that helped our whole situation and just get me out of this cycle. And from that time, it it just I became obsessed with it because when you feel as though this is your moment, you dedicate your time, your belief, and your everything, and you pour it into it. Okay. And so for those next 3 months, as it's shown here, I was able to grow to over $60,000 in 3 months, which is a very extreme trajectory, right? And then in 6 months, being able to grow that to over $100,000. And this was the most money ever seen in my life. And if you're here, some people may be here because we posted a video about how stating this, people, when they first hear it, it sounds like a scam. It just sounds like it's not real. And it's so that's what it felt like that first time when you just see this level of money, right? But what we're going to dial it back, especially because this is about how do you make this a consistent income stream. We can think about why we're here and how amazing it can be just seeing extreme gains of people just making loads of money. But how do you turn this into something that is cyclical, that for this to happen not just once, not just overnight or just out of nowhere, just putting all of your money in one thing and betting it all. How do you achieve a weekly income from this skill? Okay. So I wanted to provide all that context for why we're here. Okay. So what do we know about the stock market, right? Is there anyone here who doesn't own shares of a company at all? Again, another temperature check. Just want to make sure. Don't as of yet. That's all right. That's all right, Kumar. Thank you definitely for sharing that. All right, see quite a few people. Quite a few people, right? And so, and that's okay. Especially how the market has been in some few years, right? If you we already know this, right? If you buy stock of a company, you own a piece of that company, you own a share of that company, right? And that can give you certain amounts of power, and power that we're going to even bring up further even later, right? We know that stocks go up on good news and they go down on bad news, right? You typically want to buy low so you can sell high, right? And we can invest in all these companies, and we have to be knowledgeable of the news around us, the world around us, all of this stuff as we are investing in these companies, right? And so oftentimes how I teach about the stock market and bringing it over to trading that you know more about this than you probably expect, even without the all of the tools or knowledge that you think is necessary to be in this space. You already know. You already have that feeling. You know what your favorite companies are, your favorite uh, appliances, that fridge that you might have just bought, and you're like, no, it has to be this one, right? Can't be a white fridge. Who makes those fridges, right? Who makes the sneakers that you rock around and look all flashy for, right? Do you want to invest in them? And so when we think about this, investing, it's very typically known to be utilized for retirement. Of course, I saw someone mention their Roth, right? Where you can build long-term net worth from owning these assets. That's power. There's power in it. There's influence in it. You get decision making on crucial events at these companies, right? But the problem is not everyone has the full funds. I think everyone here has the funds to be able to invest, right? Because it only takes $1. All sorts of companies now have introduced that all you need is as little as $1 and you can invest in any company, right? But how much return can you really get out of that from just that $1, right? There's people who just don't have the capital yet. They don't have the access. They don't have the resources. They don't even know about the things that we're talking about right now, right? So how we bridge those gaps and make things accessible is where trading comes in. And that's the equalizer that enables even the small guy to have a chance, right? So investing in trading, right? They can both earn income in their own regard. Okay. And we're going to cover both throughout this lecture. But we're gonna absolutely just dive into the different benefits. We're gonna focus on the trading side, of course, right? But for some people, especially for those who may be more traders than investors, um, there might be some things where you might really want to buy a stock finally, right? Right now, this is being recorded. I know a couple people asked that, but I wanted to make sure that was clear for people. All right. Everyone's still feeling good? Press one if you're still feeling good. We're going to cover the power. Who wants some power? I'm going to cover the power of trading. How this was so life-changing for quite a few of us, right? Time is money. How much time do we develop or dedicate to all of these different tasks in our life? And we're going to break this down later. You know, the average stock market return, again, is 10% per year. Not that big of a number. I mean, depending on how much money you have, right? But if your average salary and how much you put into the market is only about $100, you'd really, I mean, that's pretty small, right? But if you only had $100 and you put in $10, or if you only had $100 rather, and it increased that rate of 10%, right? You'd only make $10, right? But the power with options is you can buy an option worth $100 and make that 10% within hours or even seconds, right? The speed is unmatched. And there's many benefits to this, right? And we're gonna cover a lot of the benefits, right? But obviously, we're going to also cover some of the risks involved. So I wanna, sorry, someone just scribbled here on the screen. Give me one sec. Okay, just fixed it. All right. And so to give a firm picture of this, right? Uh, if you were to buy a single share of a company, right? Let's say $200. If you put your full $200 into a company, right? And it increased by $10, how much would you have earned from that move? put the number here in chat. From $200 to $10. It's pretty simple. Right? You'd only make $10, right? Or a 5% increase. Thank you, Ralph, with that ultra math. But options, of course, is more attractive because you can buy an option at an even lower price than here. You can buy an option that only costs you $50 up front. And with that same $10 move, you can make $250, which is certainly multiplying your money a lot, right? By an accentuated rate. And so this gives, and that's what, when I had made that first trade, where I just feels like I'm holding my phone in my hand and my hands are shaking because I've never made that much money that fast anymore. $400, it's a lot of money for someone just out of college, right? It doesn't feel real, right? And there's this trajectory and this pathway in how a lot of us here, especially those who have had the experience already with some tradings, is how do you make this more consistent? You know, how do you just do this again and again and again and again, right? And that's where this gets really interesting and why we've kind of developed a science behind this, right? Trading, it can come in many different forms, right? We just introduced options, right? But trading, you know, within there, it's just buying and selling security for the purpose of increased profit, right? You can, depending on what you use, if it's stock trading, you're owning the shares of the stock, as we mentioned, right? But with many of these other forms of trading, you don't. All you own is the contract, right? Or the leverage that you're using to trade. So there's some of these other forms of trading, right? There's crypto, there's Forex, futures. I see a Forex trader here, right? Options, in a way, and I might be biased, I believe it's the most accessible, right? But that's what we'll discuss today. And accessibility can have its own definitions. I think accessible because of the ideas of how it's tied to just the market and to news and more. It's proper to understand to communicate for those who have ever had experience with a company or a business, right? While with Forex, and crypto, for those, while I do know there's quite a few people who have had experience with Forex, right? It has a different understanding or some types of approach that maybe people aren't able to just get and figure out immediately. And then there's a bit of trajectory learning, right? And so a lot of more of those types can be covered in a different session, right? Um, so again, for an option, for those who don't know, if we were to simplify this, and even those who do know, and we have just a little bit better way of understanding, like at the core, like what is an option, right? What are we actually buying and selling when we're trading this? It's a contract. It's simply a contract, right? And it tells us, it's giving us the right to buy and sell 100 shares at a given price, right? It's simply giving us the right to control 100 shares of a stock. So think of it like this piece of paper, right? This piece of paper is giving me rights, saying that for 100 shares of Apple, I can control that with this piece of paper. What does that give us, right? What do we say? Power. We have power and control because we're controlling 100 shares with this piece of paper. So do you know what this paper gives us? or excuse me, what do you know what this paper has? It has value. The value is in the control that is given to you, right? But there's a dollar amount that is given to that piece of paper that is the option, right? And typically, the dollar amount of the option can often be cheaper than the actual stock itself. Everyone understands that? And so even if you've traded with me or with anyone before, right? As we have quite a number of people here in the Wealth Squad, quite a number of people from afar, right? Even if you have traded options before, maybe you didn't really understand like what are we actually utilizing doing, right? When we break it down and simplify it, typically from the very basics, you typically buy a call when you anticipate the stock to go up, and you buy a put when you anticipate the stock to go down, right? You can't hold them forever, of course, right? They have an expiration date, so you can't hold it forever because you don't own those shares. That this piece of paper says you can hold this for some time, but at a certain point, this is going to expire worthless after the expiration date. So when you need a move on your option, it has to happen before that time, right? So you're kind of on a time limit for when you need your thing to happen, right? But with the more time that an option has till its expiration, that means it gives more power to that option. Because that option has more power and more value, right? Those that may have further expiration dates will have a higher price to them, right? Um, but we'll talk about the movement right here, right? Just to reiterate, you buy calls when you anticipate a stock to go up, and you can buy puts when you anticipate the stock to go down. So that first trade that uh, your lecturer made in his career was a put because I anticipated that the stock market was going to crash. If planes can't fly due to quarantine, stocks are going to fall. And so I anticipated the stocks to fall. I bought puts, landed myself in my future from that decision, right? And it really, from the onset, before you treat this as income, when you first get introduced to trading, it just feels as though like you're you are in a way betting, right? Um, where you're just predicting something is going to happen and just using all of your wits based on your own intuition. Um, you know, but in order to actually transition this into a space of consistency, that work is required, and you have to adopt a mindset of how much are you getting paid for the work that you are putting in, and how do you hit that and absolutely determine that this is a salary. You're putting yourself on payroll. Okay. Um, and so if anyone ever asks again, just want to make sure, just so that I don't have to stop the presentation. It will be recorded, right? And after, I'm going to again towards the end and after, you're gonna have something awesome that's delivered to you, okay, including the recording. We're all good. So the value, if we were the value of this piece of paper, right? It increases when the stock, when a stock, well, if this is a call, right? If this is a call because we're anticipating the stock to go up, this increases when the stock goes up, right? Because we made the right side of the bet, and it increases in value, right? So you buy it. If the stock goes up, the value of this goes up. That means your portfolio is going up as well. And then you can sell this piece of paper at any time when you're done with it, right? Before the expiration. And that's how you make money, right? Because the what you're paying for the piece of paper that controls the stock is different than the stock itself, right? And so utilizing that control and that power, you're paying yourself. Of course, if you're making the right decision. Uh, and so a lot of the next part of this uh, session is going to be about how do you get better at making the right decision? How can you almost have even way more confidence than just 50-50 about where the stock is going to go, right? And making the right decision. And so again, here with how do you make money? Just for anyone who has had no experience with trading options, um, let's say we bought an option that's valued at 43. This means you spend $43 just because the 43 cents is saying, hey, that's 43 per share. And if we're controlling 100 shares with that piece of paper, right, that's just, multiplying this number by 100 in a sense. So we're spending $43 for one option, right? The price of this option went up to 232, right? From 43 to 232. So that gives us a profit of $189. So we about over doubled, well, actually, we quadrupled our profit from just that $43, right? Meanwhile, the actual price of Tesla was $100, right? $112 or so. And so from a move that we're able to purchase an option at a lower price, and this increases at even higher, at a higher rate than the stock moves, because the stock itself probably moved about maybe $3 or $4, which is not a big percentage return. But the option, on the other hand, made a large return. And so, boom, right here, right? Quick pop quiz. During a market day, Netflix announces a deal where they partner with Amazon, and this deal is said to lead to a full 40 billion in new revenue each year. What type of options contract can you play for this move? So calls, right? Good job, everybody. Pretty simple. All right. And so there's calls, there's puts, a little bit on puts, where we understood the definition. And so some are asking, um what happens if it were to go down, right? Then of course the value would be lost on the side of the calls, right? But typically, based on some of the information from the previous slides, if we have good news, right, that typically will result in increased buying demand, because they say something that if this is producing more revenue, which is this is a lot of revenue, 40 billion, right? That the value of the stock should be more because the company is going to be making more profits, right? And so that was what increases the buying demand. And so when we see increased buying demand, we anticipate the stock itself to move up, and we would favor the side of calls, most likely in this scenario. We're about to dive deeper now with a bit more of what we can think through here, right? About making sense of what we're seeing on the charts and utilizing the charts to contribute to our decision making, right? And how we can get quite a lot of consistency in terms of practicing this discipline. Okay. And so with this, everybody's ready to learn how to read charts. For those who have never had the experience, press 1 if you're ready for that. Because I know for quite a few people, this has been the bane of this, where maybe you've taken calls, maybe you've been in a Discord, and you've taken trade and you don't even know what's going on, but you're just taking it because it can go up, but you haven't read a chart. Now, there's nothing to be afraid of anymore. Kiakili is here, right? I'm here to force you through the door and overcome this. And we're about to dive into this very simply. All right. And so, what causes the stock movements? We kind of had a bit of a precursor to this, right? Essentially, technical analysis, us reading these charts, it's the language of interpreting all of the data that's presented here in the stock market about the buyers, the sellers, the time that's buying, all this news happening, world events, and it's communicating to us in a different language, right? And so with trading, and while it says options trading here, a lot of what we're covering is going to be about any type of trading, right? But especially with options trading, because the piece of paper has a time limit, you need to figure out and how to understand where the stock is going, right? And so we utilize these charts to speak the language of the buyers and sellers and the institutional traders, right? To a point where we don't only understand the market, but we can also communicate and participate in it ourselves, right? That is what's so crucial here about learning these charts. Where if you were to go anywhere, if let's say if you just went to pick a random place, Japan, right? And you don't know Japanese, how well are you going to be able to? And let's say your phone is taken away. How able are you going to be to navigate all the places without knowing the language, right? And so when we're here in this market, how well can you navigate the market and actually utilize it to work for you if you don't understand it, if you don't have something? Because there's different ways of different dialects, different accents of the language of the market, right? And you just have to choose one, or you can speak multiple, but you need at least one to help you actually communicate and know how to get, you know, and make these decisions in terms of what side are you going to buy? Expect to go up, expect to go down. So for a candlestick, this is the absolute core of technical analysis, right? So this rectangle with two lines represents price movement within a certain period of time, okay? The rectangle itself is called the body. If we typically we look at the left side about where things have opened and the right side where things were closed when it's a green candle. So what we can say is that on this candle, this period of time, we opened right here, right? And let's say this price is about, let's say like $100, right? This is $100 where it's opening. And then right here, this is about $110. So in this period of time, we started at 100 and we ended at 110. And this is illustrating that because the price went up, that's why the color of the candle is green. Everyone understand that? Yep. Yeah, one is the typically the yes language, right? The top wick, the top line, excuse me. We call the lines that are not the body. We call those the wick, the John Wick, right? The wick. And so these are illustrating where price reached outside of where we opened and closed, right? So at the beginning here, we started at $100, but we fell, let's say, to 97, right? So the low of this wick, that's the lowest price that we fell to in this period because we fell to 97, but then we went up, right? After we went up, we made this high that's right there. And we'll say that's 103, right? We started at 100, we fell to about 97. We went up a lot after that, right? As high as 103. But then at the very end of this time period, and let's say this is one full day, we closed at 110. Oh, yeah. Thank you, everyone. 113. See, y'all are incredibly smart. I'm glad you could read through it, though. But everyone understands that, especially those who've never done this before. This is how we read a simple candlestick. And this is what it is when it's green. Feel free to ever take a screenshot if you ever need to, okay? And like we said, that's the wick. And so, on the other side, when there's a red candle, we have we opened at a certain price. Let's say we opened at that 110. We went up about 113, but then we dropped. And at the end of this day, we ended up at 100. That's why it would be a red candle, right? So super simple, right? Super simple for anyone who hasn't seen any of this before. And so, with knowing the body and knowing the wick, you could actually take on a few shapes here. We have a hammer, a shooting star, which we also call a shooter, and a doji. So we can utilize a bit of what we already learned to understand these shapes. We have the body where we opened at a certain price and price dropped all the way to the lowest of this low in this period. But at the same time, after it dropped, it got bought all the way up and closed high up here. That creates this little mallet shape, this hammer. And that shows us that there was a lot of buying and significant buying pressure despite the initial selling. So sellers tried to drive it down, but buyers were even stronger. This can give us an indication and a signal that price can likely go up in the near future, right? So now we're diving into a bit of something where if now we understand some of this information and we already know a little bit about charts. that we're able to make some conclusions if we were able to look at a chart right now, right? Because now we have a bit more edge. Let's move on to the shooting star. It's just the opposite, right? Where in a period, people tried to buy this all the way up, but seller said, no, 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 not today, right? So much so that it dropped even lower than when we opened within that same time period. That gives us a signal that it's likely that price can drop in the near future. Okay? There's nothing guaranteed here. Almost not yet, quote unquote guaranteed. But there's nothing guaranteed. But now we're shifting things in our favor, aren't we? With the knowledge of the language that we're being given. Because with the language, now we're able to understand if we see this, if this is an alphabet, and we see that, then that's communicating to us that the stock can fall further in the near future with more likelihood than just 50-50. This is at least 60-40 now of the potential of the stock to fall, right? We're shifting more odds in our favor. And the more we shift things in our favor, the more that we'll recognize our moment. And with the doji might tell us a bit less than the hammer and shooter because it's a little bit in the middle where there's indecision, where the buyers and sellers kind of equaled out. They're kind of imbalanced. They are balanced out. They're in agreement that the price should kind of be right there. They kind of fought a bit. They're like, oh, okay, we kind of agree the stock's going to be here. But the doji kind of mellows things out until we're waiting for who's going to take control next, the buyers or the sellers. This is how we analyze the participants in the market and understand the behavior. That is what is being communicated to us with these things here. All right. And now, this part, and then we're going to get into a full live demonstration of chart patterns. Okay. Well, actually, before let's actually get a bit of some live demos for the people who haven't attempted here. All right. So I'm gonna find something nice and juicy. Oh, yes. Here we go. All right. So here we go. Sharing my screen there. Press 4 if you can see my screen. See this chart? 4. Okay. This is going to look a little interesting, right? So just tell me what the candle on the most far right is. What is this candle where my cursor is? What do we expect to happen after it? That things are bullish, all right? The price is likely to go up in the near future, right? More than 50-50. What does price do? Price went up. The moment that price breaks above the top of this hammer, you may not know the full story now, but the moment price breaks atop this hammer with strength, that is an entry for calls, right? Simple as that. Even better if if we're reading the stock price here, and we're just reading through here for anyone who's never seen a chart. So only the people who have this is their first time reading charts. What is happening over the course of this period? Answer here in this chat. What is happening over the course of this period? It's a downtrend, right? We can clearly see that the price has just been falling, right? The price was up here around 300 something dollars, and now several years or weeks later, it ended up around 100, right? So simple. Now you're able to make sense of that, right? So when we see this, we're coming over here, right? I'm drawing like this. Sorry, it's squiggly. This is what TradingView does. TradingView is the platform that I'm using, by the way. In your special reward for being here, you'll actually get some pretty good goodies and a whole rubric of everything you need. So we were trending like this, right? Just like that. And that was this yellow line here, right? So when this hammer formed, is there anything interesting that happened? And some of the more seasoned traders may be able to just point it out. I kind of just drew it there. Is there anything that happened when we formed this hammer? We took out this swing low. See, some of you people are a little advanced. You're utilizing some stuff here. So you've been around. Thank you all for joining. Trying to show out. There's some cool stuff for y'all to learn here too, though, later on. But yes, when we have a hammer, what's kind of cool, yeah, I'm gonna explain. Don't worry, Shante. So the thing here is that when we have price and it's moving like it is, right? Essentially, at every high and low, those are where, let's say, the bigger traders all the way in the market, who are the billionaires, the hedge funds, the people who have real money, right? Typically, at certain highs and lows, that's where they are placing their orders to buy and sell stocks, right? They're placing them at these lows, these highs. And that if we hit particular previous lows, and hopefully just with some of these candles, it's hard to maybe a bit to see there. If I go to a different time frame, because I was on the weekly time frame, you can see that this is a series of lows, right? Or excuse me, this is where price hit a low and we reversed. Price went downwards, we went up, right? These are two lows. Under these lows are where orders from those big investors that they're being placed right there. And there's two sides. There's another side I'm not going to cover today because I don't want to get too advanced today. But just because I see this, it's also a little bit of tidbit and throwing the bone to our people who want to level up a bit. That when we have price trending in this way, and we have a low, that if we come and revisit that low and bounce off of it, that increases the probability to go up. right? Some may know that simply as support, but I got a bit deeper there than support that maybe not everyone knows, even the people who have been around, right? And we're going to quite get there at a certain point. But just based off of that alone, and since I'm on a different uh, time period, because right now we're just looking at every single candle is its own week. All of these candles are its own week. When I switched the time period here, each one of these candles is its own day. Okay? That we see that this is a hammer and that we can understand that we can anticipate that stock can likely go up in the near future, right? So if this candle is formed at the same time or around the same time that we're hitting a previous low, we're getting that two information that price is bouncing after hitting a low. And we have this alphabet, because I'm treating the shape of the candle as an alphabet, the hammer is also telling us likelihood that the stock can go up in the near future. We can use that information to get even more highly probable in our understanding of the language and what we can anticipate to happen, right? And so if we break a, if price then climbs above the hammer, because we understand the hammer is sold off and then the buyers bought it up a lot. One more time, what do we anticipate to happen after this? Based on all of the information we know, right? Price may go up soon. What do we buy for options to benefit off of this? Calls, right? And so if we bought calls, and don't worry about any other information about options yet. If we bought calls and we just chose any option, just about, at least from the, the first week, it did go up and pulled back a bit, right? But on the long time period, we did go up in the long term, right? And there's going to be some discernment. And I don't want this example to even confuse anybody because of the time it takes for a trade to work out or anything of that, right? We're going to make more sense of that, pretty sure, right? But I just wanted to make sure and let you know that we're putting the knowledge you just learned to action. And all you did was answer the question by absorbing the information. And no matter what you got, you will have made money, right? That you would have earned money for yourself. And through reading the price on the charts and better understanding this process, we can do this every single day. We can actually do this just once a week and make a weekly salary. All we need is the understanding and confidence and patience and belief within all that we've brought here together with our trades. And just make it our moment. As soon as we've gotten all of the valuable info that the chart has stated to us, we can use information outside of the charts, like news, right? Like the economy, right? Our understanding, and combine it all together. And we're gonna cover just uh, number one, we're actually gonna come back to the charts really quick. Don't want to spend too much time, but your brain hopefully is jogging right now, right? Don't worry, we'll come back to time frames. All right? Because the time frame that people overthink. And I want to make that clear because people always ask, what time frame do you use? It's something you absolutely do not overthink. And it's not even something, well, I will give you an answer and I'll also give you this whole package that's at the end that's going to give you everything that if you want step by if you're the type that needs, hey, I need my handheld here, I need step by step, right? That's going to be there. Okay. I do not want people to overthink. But a big purpose of today's session is because this is one of the first times I'm teaching a workshop where I do want to give some form of, hey, if this is it, do this, right? But it's not, but we're going to provide that so that you have the training wheels. But eventually, it's the skill set that you build that you will just be making these decisions on your own. And you're going to be fully capable, and you have to believe yourself to be fully capable. Because we don't want to complicate this too much. So you understand the candles. You've seen the shapes. Press 1 if you've seen the shapes and you understand the candles. So you already have a step in the door. And we already demonstrated that that's all you could have used to make a little cheese. And so now, oftentimes traders use these patterns and identify patterns in the market because those patterns can communicate information as well, just like the shapes of the candles can too, right? So we have these patterns. There's a double top, double bottom, and wedge. These are the most common traded patterns in all of stock history, right? So how do we identify this? So when we have a double top, it's when price gets to a high, falls a bit, it returns to about even or equal to that high, or even slightly higher than it, but then reverses and can't really breach fully above the first peak, right? That forms an M shape, right? So everyone in chat, put M for the, yeah, dropped an M. Right? And so when you see an M and when you see an M shape, and I'll add more context, when price has gone up for at least quite a while, quite a bit on the chart. It's gone on for quite a bit, and quite a bit obviously can be subjective about what that means, right? But I want to add some of that context first, right? But let's say price rose and then it formed this M shape. The moment that we break this middle part of the M, right? After forming these two peaks, let me choose a different color. When we form the McDonald's logo, that many traders, when price, after forming this M shape and then we break, which is at this point, make it clear that it's this point. At this point, when we break below, that this is a point where we can anticipate stocks to fall further, just like a shooter, right? And this is the point of entry, actually, for puts because of that. Everyone's able to see that? So think about McDonald's. It's not all that good for you as much as we love it. Not we, because not me. Some of y'all, I don't mess with that. But you can think of the M. That when we break the middle of that M, we can anticipate the stock to fall down. That gives us more information. It's communicating more. On the flip side, literally, give me a W, chat. Put the W. W for win, W for wumbo, right? That if we make two bottoms around the same area where price reverses twice, it's known as a double bottom. Then the moment that we break, again, that we break the middle of that W, what is that? You already know the answer. And no, just like I said, in terms of the time frames, don't overthink it. It doesn't matter. I mean, it does, but the logic is the same, no matter what time frame is what I'm trying to say. It's the same logic. And when you get deeper in trading, you'll see that it's so applicable in so many different areas. Okay. And so that, like people are saying, we see the W, that's a call entry. When we break, it's an entry only if we break the middle of when the W's formed. Okay. Everyone understand? And that I'm going to strip back things just slightly for one moment, right? That let's say we're not trading at all. We're just not making any trades. The purpose of why we're learning these things is just, again, learning the language, right? We're learning the language and we're just getting practice of better anticipating what the stock is going to do, where it's going to go, because that is what is going to empower us and help decide what our moment is. Understood? And so with uh all of this is leading to something so much greater. I'm almost getting too excited to it. And we're about halfway through today's session. But just wanting to let y'all know that, right? With the wedge, it's kind of where price is kind of trading in some consolidation, and it's like a triangular shape. Typically, entries can be taken when we break out of one or the other side, okay? And that's just the simple side of it here with trading patterns, okay? I challenge anyone here who hasn't read a chart before, just when you receive what you get then, and when you go out after this workshop, that I'm going to challenge you to try to find some of these patterns on your own. And you don't have to trade it. Just make some determination and see what happens. And it's fine if you're right or wrong. It's because when it comes to trading and how we overcome the fear of the stock market, because I'm sure many of you are here as well because of that fear, or because of saying, is this all a myth? Is this just something where people just get lucky? And that when you put your money in, you're thinking about it has to be the right price, because what if it goes down and what if I lose? I promise that we will overcome that. I promise that you will feel more control. You will feel more power. And that what I need everyone here to do in person for yourself is clap it up for yourself right now, because you just learned how to read charts. And you have a bit more understanding of what's likely to happen just based on a little bit of information. Because we didn't really cover that much, but we just clarified just a bit just to better uh, understand and get more confidence in what we are capable of. Okay. And so I really want that to resonate for because I know we have quite a few people here who have dealt with this quite a bit, and I love y'all and support y'all. We're gonna feed the streets, if I were to say, right? But for the ones who've been hungry for more information, but for anybody who's never experienced and done this before, like I want to do that confidence, that understanding, that that you're here, your foot's in the door, and now there's no going back. All right. Um, and so real quick, pop quiz before we get to the next section. What could we expect to happen next? And what's the name of this candle? So I wouldn't full say downtrend yet in terms of trend, right? But we can just expect something more simply to happen. It's probably price fall, right? And then we can get a reversal, shouldn't start. Uh, just for very quick things, right? Let's say, because I'm sure some people are thinking it. Let's say the stock doesn't fall, right? Let's say it continues to go up after this. What would you do? There's a few options you can take there. Either, let's say if it didn't fall immediately, let's say the stock did not do this, and we actually just started here the next day or next period, whatever, and just started moving forward. What would you do? Someone said cry. You would wait. Oh my God, perfect answer. Right? You watch and you wait. Because if it can still continues and it didn't break below this shooter, then maybe it just didn't happen. And it didn't give you the signal for you to actually enter that trade. Right? I mean, this here is the signal, right? But when we're thinking about the context of these things, right? The more information, the merrier, certainly, right? And from certain dialects of reading charts, remember I mentioned accents and dialects of this language, that a trade for puts would only come if the price fell below this shooter, right? So even though it's giving us information that it's likely that the stock can fall, that does not mean it's guaranteed, but only until you get this I'm going to define it in the sense of like if this then that. So if I see this shooter, I'm anticipating the stock to fall, but if I see the shooter and it breaks below, then I'm going to buy puts. If I see the shooter but it doesn't break below, that's not enough to buy that put, right? So we're that's one, you know, dialect. I just wanted to make that clear because I know people are going to put it in the chat about other scenarios that could happen, right? But we're thinking about the bare bones basics that you are already capable of doing. And that without any even further information, you can make a winning trade. You can make profit off of the efforts and off of the knowledge that you just gained, right? And so just to proceed, excuse me, sorry. I just wanted to showcase something here. So let's say we saw this. We saw that there was a hammer before, right? What is kind of forming, let's say, let's look away from back here and get more information just about what's happened here, where prices fallen first. Prices fallen first, made a low, fell near to that low again, and then made a reversal again. Where's that? The double bottom, right? Where are we, from what we've learned so far, where are we buying our position? And what position are we buying? Tell me where and what. Above the middle part, break of the neckline, correct, right? Somewhere right here. So that would mean if this is the neckline, I'm going to identify where the neckline is first, which is the middle of the W. Whoops, I drew on the wrong thing. And that a break above or at the point of the actual, well, yes, the break above, which happened on this candle here, or may have happened on a later candle. That's both of these lines that I just illustrated there are points of entry based on what we learned, right? That's just giving information on what you can expect after a double bottom scenario, right? Took some time to go and really make a full big old move, right? But that's what we can anticipate typically. So I just wanted to cover that very quickly. But just to make sure that we get to the part that everyone's certainly been waiting for, I'm going to just move ahead of the charts and we can come back to them if necessary. All right. Uh, as we're going to this next part, everybody, just let me know how you're feeling right now. Press 1 if you're feeling all good. Press 2 if it's coming but you still feel excited. Press 3 if you're a little confused. 1, 2, and 3. Lots of ones, lots of twos, but it's coming, right? It's all coming together. So right now, turning trading into an income stream. Now this is going to be a full part where even some of the seasoned traders can get some knowledge right here, okay? One thing that some of you may already be knowledgeable of, right, are dividend stocks. So just to marry the ideas of investing and trading that we covered earlier, dividend stocks, we're stripping it back and we're going back to investing, right? Actually buying the stock itself. So there are a number of stocks out there and they pay out almost like a salary to you for owning their stock. Okay? So the dividend is the amount of money, it's a percentage that they are paying you for owning shares of their stock. So AT&T is used as an example here. So AT&T, let's say you just love this phone company, as weird the service can be at times. You love this company. I'm buying AT&T, and honestly, I think that they are very strong as a company. I'm buying it. It's not that expensive. Let me grab. So the CEO of AT&T sees you, figuratively, walks up to you, gives you a high five, and say, "Hey, take a little of this with you. Here's your reward for owning our company. We want to make sure that you're rewarded for owning our company, right?" And so on a certain period of time, whether it's monthly or 4 times a year, for owning a stock, you can receive money in the form of a payout from that company. I know a great portion of us know this, but there's quite a few people who don't, right? There's this website, suredividend.com, where you can find some of the best dividend stocks that have, because there's some that pay more than others. And the benefit that's within here is about within owning the stock, of course, you get power and control, but now you get income from that control. And imagine the power of getting that and even getting more reward as you buy a stock at a low price and it increases. And that incentivizes you to own it even longer, right? And what can happen is that through owning stocks, that can you get an income from dividends, but you can also earn an income from trading options with the shares that you own. And so keep that a bit in mind. It's where now for those who may have never invested, you might think about changing your mind and actually just making a decision soon for how it can uh, grant you more benefits. So here's a very important as we think about earning and using the market and how to earn an income here in the market consistently, right? We demonstrate some of the skills. Now let's carve the mindset and carve the best practices to do this. First, treat the market like a job or a business, right? So investing overall is typically beneficial for retirement and more, but how can we actually treat this as a vehicle or see this as not just something about money, 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 I can be a millionaire. Let's think about this as something that's core to our development, something that's core to being able to access resources and provide. So if we want to make consistent money from the market, well, it has to be the same consistency that we should expect from a job that we're working, right? So in that way, you follow some of these rubrics. Set a schedule based on your availability, because quite a lot of us work salary jobs or from different time periods. Set the schedule how much time you're dedicating in the market in terms of learning and actually trading it. And it doesn't have to be that long. It can be between 10 minutes to as little as 10 minutes in an hour. Could be longer than that, but all it might just need is that. Develop a business plan. How is this business? How is it going to make money? How are we going to consistently do the same thing and that's going to result in our revenue? How do we think about other participants, right? We're developing a plan around our participation, tracking and reviewing our records, our progress. What have we done? Okay, the business plan is cool, but what are some of the flaws? Where are we losing money? And what's causing us to lose money? What are our strengths, right? Which of these patterns and strategies that we're using, which of these are giving us better results, and how can we limit the things that are hindering us? Just like a business, we're managing our finances. You have to budget. You can't just use any money. The budget for money as you operate in the market has to be allocated in a specific way. And because if you don't do that, things won't be all that great, will they? And the purpose of this, a lot of this session, but specifically this part, is creating the mindset and the boundaries around trading so that it doesn't result in losses. Because that is one of the major points for why we have people in the chat scared, and why we have people worried and hyper fixated on things that when we enter the markets, because we haven't established those boundaries and we haven't done the things as if we're treating it like it's our job. And do we want to lose our job? Do we want to sabotage our business? Or do we want to create something that is driving income for us on a consistent basis? Because what would you rather? What would you rather? Think about it. You got to think hard about it when it comes to how you're establishing our step around the market, right? So shifting the mindset. If you become a trader or involve trading in your life alongside your 9 to 5 or so, what is your daily wage? So let's say we had a job and it paid $20 per hour and we work for 8 hours, right? That's $160 per day. You do the work, you get paid, but what you might be losing is time because of how much work, how much time was equal to that work, right? But when we think about a salary and we migrate over to the market, we have to hit those same goals and look at it the same way. And we don't drift too far from the realism and what we are attempting to do, because there are many people here in chat who want to become full-time traders and they see the power that options brings them and they want to quit their job. They want more time in their life. They want all these things. They want to be a millionaire. But what's more realistic that's right here? And how is it going to actually be favored and understood in your life if it's not something that's realistic of what you've seen and establishing those same expectations for some? Anyone hearing me? And so when you come over to trading, if whatever job you're working now or in the past, now you think about trading, if you want to replace that, the first thing it has to do is at least equal that. Okay? And so your goals, in a way, should start small. And your money, you shouldn't start, I'm going to tell you, don't start trading with a lot of money, right? But we're going to start with something realistic and we're going to get into how much money it should be. But if we're equalizing that same goal, our goal is $160 a day and trying to get there, right? But what makes it worth it is because of the time it gives us. That 2 hours compared to the 8 can give us that same amount, but we're trying to hit that benchmark. You do the work, you get paid, less time involved. So we equate it to the job, but our goal is spending less time doing so, but doing so at a consistency that that a regular wage job can involve. Okay? Everyone understand? So now so this is going to be super interesting. And so now we talked about the dividend investing. Why did I bring that up? Because it's one side of owning stock that can favor you in terms of getting paid on a regular basis. But now, if we own stocks, how can we leverage the power of the stocks we owned and then automate that with trading? So we're bringing our partners from out back. They've just been sitting and they've been waiting for their moment. And now we're putting them to work because they're your employees, these stocks. Now you're putting your employees that have been sitting, they've been moving up and down, but you're putting them to extra work because now they have opportunity when it comes to this strategy here. Covered calls. Okay. So not only can you make consistent income from dividends, you can also earn consistent income through covered calls. So essentially, when you own a stock, specifically 100 shares of a stock, so it's still a little bit of a barrier, but we'll overcome that quite certainly. When you own a stock, you actually get the ability to create options. You get the ability to create this piece of paper yourself. Okay? And that when you create this piece of paper, you set the price, and that you can, because you created it, you can put it on the market and you sell it to other people who are trying to buy options. But you're the one who owns it first, and they're trying to get it from you. But so because you own the shares, you have that ability. Because remember, if you own 100 shares of a stock, that means you write the contracts that controls those 100 shares, right? Everyone's following? And then you give the paper to the buyer and they buy it from you. Okay? So you are the one commanding the option in this scenario. Other people are buying it from you. And based on the price it's set, that essentially the way you're making money is just however many people are buying the option from you. Okay. And then that's what we know as premium. Okay. And so we didn't cover the strike price for anyone who doesn't know it here today, right? Um, but just simply know it as the stock that the price that a stock can reach, but it's established by the people who are selling these contracts. Okay. And so um ignore the chart. Don't look at this chart for right now, but let's focus on the example first. Okay. So let's say you own 100 shares of a company and it's at $50. If you sell that, if you create the piece of paper and you sell the option, and you decide that the strike of the option is $55 and it expires in 1 month. That's what you just did. You own the shares, you create the option. And the option price, the actual strike price is above the current price. Okay. So everyone's able to see, right? The company's trading at $50, but we create a piece of paper for the $55. Okay. So essentially, when you are selling covered calls, to simplify it a bit, you are selling the option to people who want to buy it. So I'm going to ask you something right now, right? When you are, when for the people who are trying to buy it from you, the people who are trying to buy the call from you, what do they want the stock to do? The people who are buying the call from you, what do they want the stock to do? Tell me right now in chat. They want the stock to go up, right? Correct. For you as the person who owns the paper, you want it to go up as well, just to have the demand there, right? But your job is that the strike, you don't want the stock to get above whatever strike price you picked. So in this previous example, if we say 55, I start selling this piece of paper and I decide 55 on the actual stock price. You don't want the stock to get above 55, but you earn money for everyone who's buying it from you all the way that's moving up towards that 55. You kind of get me a little bit. There's reason why you don't want to get it above 55. I don't think we'll be able to cover all of that. But there's a very more specific reason just for that thing, right? Where you don't want them to get it above 55. Because essentially it involves you have to then let go of the shares that you own. You know, the shares are literally the reason why you created this. But if it gets above and expires, you might have to sell your shares. So that's kind of the thing where you may not that where what we're aiming for and just giving an explanation about what the goal of the person who's selling the paper, right? So if we use one more example here, so now let's look at the chart, right? So one more example to try to make it make sense again. Let's say Apple. Now I own 100 shares of Apple. Because Apple is going up, I know that people will want to buy calls. All of us here on this chat, because we learned what calls are do and what the power that is had here. That if a stock goes up, that people are wanting to buy calls, right? But me knowing that, I can take a bit advantage if I own shares of Apple. So I can utilize the power of my Apple shares to create the piece of paper. And so what I'm going to do is that I anticipate the stock can go up. All these other people, stock can go up. But I'm going to say that, sure, I can think it can go up, but I don't think it can get as high as 125, right? The stock is maybe here around $90 or 100, but I don't think it can get above 125. I don't think it's going to get that high. But the thing is, maybe I don't think it's going to get that high, but other people who are buying from me may. And you're taking advantage of that. Right? And so as it goes up, you are selling your options to all the buyers. Like, here you go. Here you go. Hey, Miss Sally. Here you go. How are you doing today? Here you go. And while the stock is going up, the premium is increasing on your option, right? And people consistently are paying higher prices, and the more it's going up. And that you're taking advantage of that. And that's all of the money you're making. Because while you're benefiting from the stock going up, the money you're making is based off of the people who are buying from you. So you owning shares is giving you power to make these crucial decisions and determine your own price. You become the seller in the marketplace, right? And so what if you're just consistently doing this every week and that you're picking prices that you just don't think the stock is going to get to? But if other people do, then you're going to make money regardless. But the stock doesn't even have to get there, you know? So is that maybe jogging a couple of wires for some people? This doesn't get covered, no pun intended, all the time. Because because maybe because people it's more accessible to for because you have to own the shares of the company, right? But this creates a level of control where you're setting the price or setting the area where you think it's going to go, and that can consistently give you time over time. For those of you who have shares or invest in dividend stocks, and for that reason, that can give you all that much, right? So this, if you want to, feel free to take a screenshot of this slide. This can just give you the whole rundown one more time, everything we just covered. All right. I do want to move ahead and make sure we reach time. Um, and afterwards, if anyone ever wants to follow up with any questions, you can absolutely answer. I will absolutely answer for you, but I would definitely want to just move forward for the essence of time because we still have a little bit to get through. We have a special thing at the end, okay? But everyone's still okay? So with when it comes to day trading, um, there can be more inconsistency, right? Because the market can show you something different each day. But the mindset shift again is that doesn't stop your consistency. It's up to you to be consistent. And how do you be consistent? Following the same patterns or doing the same and utilizing the same technique every single time. Okay? Every single time when we're thinking through these um, patterns where we saw the hammer, we saw the double bottom, your strategy can simply be that and then hitting the benchmark every day that you're just seeing this or just looking for any stock that has that same setup and doing it over and over again to hit that salary benchmark that we covered earlier, correct? And doing so in such a way that results in those repeated profits. Okay. And I have a slide later on that covers a bit more of that as well. So we're going to cover now the plan and process, a little bit further of this plan and process, and bring this together. Okay. So when for trading itself, for day trading, as we mentioned, make learning it a habit. Train at least 10 minutes a day. Keep a calendar of at least one thing you learned every single day. Schedule trading around your work. It can be as little as 10 minutes to an hour. Um, for some people who work 9 to 5, don't if anyone's here is a boss, don't hate me, right? Where if you're an employee, take that bathroom break, look at the charts, and make a trade, right? Where those can be just the opportunities. Because we have traders who are teachers who trade during their lunch break at school or when kids are at recess. We have truckers who are trading, listening to I host a live stream where I trade every single day. And if you want to attend that, someone can drop the link in chat here for me as well. But I know there are people who drive trucks who listen to me every single day and are trading while they're trying to absorb information and learn, while they might glance at the charts, kind of crazy stuff in a way, right? But my main point is that if you want trading to be here, I'm gonna have to, if you want trading to be here and utilize it and you recognize the power, you will make time. You will make time. And don't think that there's ever too little time because you can get to a point where even on decisions that don't have to be so methodical, so specific, you can still make money. You can still figure something out. Maybe your life is not and your schedule isn't around day trading. Maybe it's around swing trading, which is holding a trade for multiple days. That's what I do. I'm I watch the market from 9 a.m. to 4 p.m. every day. I'm there the whole day, but I still favor swing trading. And I'm able to make decisions to better, more easily decide where the stock is going to go on a longer period of time. Okay. I'm gonna mute my I'm gonna mute my stream for a moment because I'm getting people, you know, there's a follow sound when people follow. Okay. And so here is what I want to demonstrate for you all. And we're going to provide more benchmarks. And if we have extra time, because I'm not going to stop now, but towards the end, if there's extra time, I'm going to go over time to answer some questions and demonstrate some of the actual stuff where I talk about repeated setups, finding the same setup over and over again, and how that leads to income creation and that can compound. So right now, take a screenshot if you're on your phone or your iPad of this screen, okay? And if you're on the computer too, you feel free to do so. Here's the blueprint. And there's two, I'll call this the hero trader's journey, right? The hero trader's journey. And there could be two paths that you choose. So there's one formulated here for those who have quite the capital. You know, y'all are some awesome money earners and you have disposable income and you're just able to utilize that and put it to work. So for those who have the capital and more of that cheese, that the pathway is that you can start in dividends. And you buy those favorable stocks and dividends and utilize that power of buying 100 shares out of it. You go the pathway of learning options trading, understanding charting and mastering the market movements. What did I do? What did we do? What did this community do together in this 2 hours? Is get our foot through the door. And we already did half the battle. You're already there. That's something to be proud of. Then you can favor over to covered calls, as we discussed. And that can involve yourself in paying yourself weekly, utilizing that same strategy. For those of us starting small, who don't have the capital, the full capital to own shares and do all this, that you can earn not just by compounding, but the goal is compounding, but also hitting that benchmark of the salary that we covered earlier when we're treating trading like a job or business. Okay? Hitting those benchmarks. Starting small. This could be starting at $100, 200 or 500. That's considered small. If you wanted to trade options, you can start with as little as $5 actually. But you might just want to start at some point where you're able to just utilize a bit more power, but never too much bigger over than that, right? Um, and then day trading using the same setup, the reward you're getting at the end is going to tell you some of the same setups. And that can lead to paying yourself weekly, consistently hitting those benchmarks by doing the same thing over and over. Another screenshotable slide here. If you start with $500, this might be what it looks like. And this is the pathway towards growth. That let's say you start with $500 in your portfolio and you establish your minimal goal is $50 a day, utilizing this 500. But your minimal loss is no more than 30. Okay? This can establish, because what I'm showing you right now is not compounding. This is not compounding right here, even though it can lead to it. This is about earning that income, hitting those benchmarks, your wages, because this is the process of building it to replace that job. If you want to replace it, either to replace it or treat it as its own side of the business. What's the business, you ask? It's you. The other side of your business, because your 9 to 5 can be what's funding the business, and that is carrying over into this account, and the money is working here as well. That's funding your overall net worth. And so when you have these benchmarks, your consistency climbs itself as so. Where we made money, and we had a day when we lost, and that brings our portfolio back down, right? Where if our portfolio drops in value. But it's about hitting these consistent benchmarks. And that when you start with a point here and the progress is made, what you should do at the end of every single week or every 2 weeks, if you're really trying to treat it as bi-weekly salary, that this is what you need to do. Every week, every 2 weeks, you're paying yourself whatever that process was. And that after the growth has happened through that consistency, you're putting your account back to its regular amount. That removes the fear. It keeps your balance of how much you have control, and so that you are not putting yourself too much at risk, but you're getting more money regardless. The $500, you're treating it as a vehicle. You're not treating it as just something that you're putting into a stock challenge, and you're just trying to see ballistically how it can go from 500 to a million, right? We have these challenges, and sometimes some of you may have seen them, and they can be rewarding, right? But as we said earlier, in terms of securing your moment and the space of realism and the process, you have to treat it from this perspective. And if it's really going to be something that is doing labor, a business, revolving money that is circulating back and forth between your portfolio and your bank account, because now you're actually making money. Because that money, if it's just sitting in your portfolio, that's not, it's not, I mean, it is your money, right? But it's sitting in your portfolio being put to work. In order for it to really be your income, it has to go back somewhere where it is actually, driving the increase in your net worth. And please understand, don't what I'm saying there, right? Please, hopefully that really resounds everything, because this is what we've been trying to approach throughout all this understanding. We had to do all that to get here, especially for those who are day trading and not doing the covered calls. This is the path we're going. This is the shift. This is how we actually get money. This isn't just how we grow an account to 1 million overnight. This is how we get real money. It's actually paying us and giving us more opportunity. Okay. So some of the common pitfalls that people have, I'm going to try to blow through them just so we make our time. Some of the common pitfalls that we have in trading where people fall in is because they're not setting the boundaries. They're not setting the limits. Every time you start a trading day, there must be a limit to how much loss is allowed. Okay. Your account should only be able to decrease by 5% max on any given day. I'm just going to give that benchmark. You can change the number, whatever, if you feel. But I'm going to tell you right now, you don't let it decrease by 5%, but more. Don't let it decrease more than 5% on any given day. So that means if you have $500 on one trading day, You should only allow your portfolio to fall to max 25. Okay. So if it falls negative 5%, you stop trading altogether. Don't even try to recover it. And honestly, from what you're trading, it should, you should not ever risk so much so that allows that to happen. And I'm going to tell it bluntly, just like that. Don't do it. But we're human. It's going to happen. Don't be too mad at yourself if it does happen. But you should be reflective and accountable enough to do everything you can to prevent it. And that's what we mean by putting boundaries. So put boundaries on your losses, but put boundaries on your wins too. Since we're working in accordance to a salary, you don't get a bonus every single day, but it might just go up a little bit more, maybe because you worked a bit harder, because there was an extra hour, you put in some overtime, right? But when we come to consistency, it's about sticking to that salary amount so that we understand the value of the work being done. And that we're making sure the money is sticking, right? So your goal for everyone, if you're gonna start from here after this workshop, your goal, if you're either never traded before or you want to get started and you're welcome to this wonderful world, or if you've had some experience, it should stay the same for about an entire month. Don't move it up or down until you've hit those work benchmarks. Only until you've gotten past the probation period and you did that review of the work that has been done, only should that then be when you get a raise in terms of your expectations and the benchmarks that you're looking to hit for your salary. Okay. Um, not and another pitfall is not having a mentor or accountability partner. Okay. You should never go out here alone. Never. Having at least one person to talk about trading helps establish a consistency in just doing all of this. I know myself and some of my friends and people who I've traded with for a long time, they know that I wouldn't be in this position right now without them and without the support, without the conversations, without the review, without the accountability, right? We are only we are only human. And we can only get better the more that we learn, the more that we discipline. This is all the actual decision making is a road that you take alone, right? You have to be the one to push the buttons, navigate the apps, fill the knowledge, but the experience doesn't have to have happen alone. You can get the ideas, consultations, and more from either someone in the same space or a proper guided mentor who's been there before and is trying to guide you to prevent making the same mistakes that we did and guide you to further understand so that you have the power to then teach someone else in your community to bring the power and resources that trading will bring to you, and that how that is going to change the community around you. How is that going to change your family? What is that going to do for your kids, your nieces, your aunts, mothers, fathers, everyone? Think about that next time you take a trade. Okay. And so, what you will get immediately after this is a full 30-day starter kit, a full challenge, a whole starter plan, right? Both for beginners and seasoned traders. It's completely courtesy that we built for you. Okay. So in those 30 days, you can just get right to it and have all the experience and discipline necessary to be a successful um, trader. Okay. So that includes a full learning path, what stocks to trade, just for some suggestions, right? Uh, a handful of suggestions for dividend stocks, some guidance on the time, what are some optimal times of days to trade, and how to link your work to certain periods of the day. Okay. As well as habit management and doing accountability within there. Okay. So that will be sent to you after this session today. I really wanted to make sure like that was given to you. All right. For the near coming right away, right? We have our mentorship program where I will be that mentor, right? Where we will be covering all of these topics and diving into them much more deeply on a full basis in the same format that we did today, right? And that will be happening this Sunday. And enrollment is going right now, where we've taught over 1,400 students. And this is what I do every single day, right? When we cover these platforms and we you go through it side by side in a full education lesson format every single Sunday. Okay. And if you want the guidance, because we have already so many people here for trading, put the WS if you're from the Wealth Squad. And Amon, you can drop that link again right after the WS's end here. That we have live trade alerts where I post my trades, right? Where I share my trades. And me, this awesome guy, Michael Crow, and of course, Chris Johnson, that we post our trades and some of our information in the research that we've done, right? And so that could give some extra assistance if necessary. And so many people can already account for what has been given there as well. All right. So just two more gifts right here is one full free book that will be emailed to you as well, provided with the kit, and also 60% off of my mentorship program if you may want to attend and be part of this and making this your moment. And so with everything that has been covered fully today, I wanted to absolutely give a full thank you to allowing me this time to teach and explain and give these roadmaps towards these methods of earning income, these methods of turning the market into this salary producer and establishing the mindset and processes to create that. Okay. And it's been an absolute pleasure. Out of 10, give me what number you thought I did today here in the chat. You can follow me here on these platforms. If you loved it, had any of this information, I'm very much so thankful for this opportunity and all of the that has been given here. With that, I will have a bit more here to speak at the end of this session. I'm going to just end the recording here, but I wanted to absolutely just make sure that was fully known and communicated, because it's been a pleasure and it's always great to share this information about how this can change the community around you.